Hello everyone, welcome to Switch YouTube channel. Here is another educational video for you. So today we'll talk about an imbalance, very important tool on smart money concept, which smart money traders use every day for their analysis. So first of all, why imbalance is so important? Imbalance means the disbalance on the chart. So price always wants to cover this area. Why? Because price always strives to be in balance. Price always strives to be balanced. So it's very important. It works in the same way, for example, why price moves from one liquidity side to other liquidity side. Yeah, we collect liquidity from the one liquidity pool and then price goes for another. In the same way, price want to cover the imbalance, yeah, inefficiency on the chart, and then price go for another inefficiency. So it works in the same way. Okay, so I think we could start. I prepared a few important information about the imbalance, some examples, and then of course on the chart we'll try to find some examples too. Okay, so the imbalance. Imbalance fair value gap is a price imbalance, arranged on the chart where little liquidity has been laid down. Imbalance refers to a strong impulsive candlestick movement that price almost always comes back to cover. The best example would be, imagine you are painting a wall with a paint roller. You swipe from top to bottom. What is left on the wall? That's right, voids that needs to be filled. How to do that? That's right again, from bottom to top. It's the same principle with imbalance. Yeah, again, and that's what I said about why imbalance is so important. Price always wants to be balanced. So it's very important for the price to cover the inefficiencies on the chart, the imbalances. What is the correct way to mark the imbalance? The first thing we need to find on the chart is 3 candles, one of which will be an impulse candle. Then using the tool Fibonacci retracement from the wick of the first candle to the wick of the last candle, here's how it looks like schematically. Okay, so first candle, second is impulsive one, third candle, and we use the tool Fibonacci from higher wick of our candle to the lower wick, from higher wick of the first candle, the lower wick of the third candle, yeah. And this area is exactly our imbalance. The same is there. In this example, I mean on short, we use lower wick of the first candle and higher wick of the third candle. Second candle is impulsive, so now we can find our imbalance area. And there's a perfect example how price covers the imbalance. We have test, then small reaction, but after that price made a retracement to cover more than 0.5 of the imbalance. And then finally continued our short trend. The imbalance overlap can be full fulfillment and also, which is most often found on the chart, 0.5 overlap. It means that sometimes price could just test the imbalance by a few pips and still show the reaction, but sometimes few pips is not enough for the price to cover the imbalance. So the best example of covering the imbalance by the price, yeah, it's fulfillment, when price cover the full area of our imbalance. But still 0.5 is always enough, really. Okay, so there is few examples again, so we can see first candle, second impulsive, first, second, third candle. From the lower wick to the higher wick of third candle, we can see our area of the imbalance. Again, there in this example we have 0.5 test of the imp, then some reaction, but then price finally made a retracement to cover the full imbalance, yeah, so we call it fulfillment of the imp, and after that continuation of the short trend. Again, on the long side, first candle, second one is impulsive, third candle from the higher wick of the first candle to lower wick of the third candle, we can see our area of the imbalance. Test by a few points, after that continuation, but then again retracement, liquidity, sweep inside the imbalance. So you can see that this imbalance is still valid for the price, like an area to continue the trend, yeah? So sweep inside and still continuation of the long trend. Another one, again, first candle, second impulsive, third candle. After that, we have test of 0.5 of the imp and again continuation of the trend. Perfect. On short side, again, first candle, second impulsive, third candle. We can see the test by a few points, not 0.5, but still we can see the price continue the short trend. And another one, again, from lower wick to higher wick of the third candle, from lower wick again, sorry, from lower wick of the first candle to the higher wick of the third candle. Again, test, and then continuation of the short trend. So you can find there a few more. Again, imbalance, yeah. First candle, second, third, imbalance area, test and continuation. And there is example of fulfillment of the imp when price covered the full imbalance, yeah. When we don't have anything more to cover, yeah, on this area. You can use imbalance for your analysis to understand the context. You can use imbalance as a point of interest for your entry model. You can use imbalance on high time frame as a point of interest inside which you will look for your entry model. Maybe you remember our previous video about entry models. There exactly I explained a few examples of entry models, and one of them was entry from the imbalance. So now you understand why exists something like entry from the imbalance, because why imbalance is so important and why price wants always to cover this imbalance. Okay, good. So now I think it's all. Now let's try to find some examples on the chart. Okay, so we have here, I don't think it's like, like every tool on smart money concept, it works on every market. Indices, crypto, Forex, doesn't matter. Okay, so I can see already that we can find an imbalance, for example, there. Look, we have first candle, second impulsive, third candle, from lower wick of the first candle to higher wick of the third candle, we have our imbalance area. Yeah. There was a test? No, without test. Okay, but still we can see another imbalance there. Yeah, sometimes price could create on one move few imbalances. Of course, the best entry will be on the first one. Yeah, because there is more chance that price will cover exactly this one imbalance. Again, first candle, second, third candles, three candles from lower wick of the first candle to higher wick of the third candle. You can see our area of the imbalance, and this exactly example of the fulfillment. Yeah, so price covered the full area of this imbalance, and after that we can see continuation of our short trend. Perfect, perfect. Okay, so let's try to find something maybe on the long side. Okay, look, first candle, second candle, third candle. From higher wick of the first candle to lower wick of the third candle. There exactly we can see test of the 0.5 of the imp and then reaction. Yeah. And again the second imp on this move, again from the higher wick of our first candle to the lower wick of our third candle. There is an area of the imbalance. Perfect. Okay, and maybe let's try find two more. Okay, for example there, first candle, second, third candle. from higher wick of the first candle to lower wick of the third candle. Again, fulfillment, continuation of the long. Perfect for me. Like an example how it works, I hope, of course, you will understand, but I mean the perfect how it works. Okay, and maybe now on short side. Okay, there is a perfect example. Look, first candle, second impulsive, third candle. From lower wick of the first candle to higher of the third candle. Test of the imp, fulfillment of the imbalance, and then we can see continuation of our short trend. Okay, so I think it's all. Thank you for watching. If you have any question, of course, ask on the comments. We'll ask you. I hope this video will be useful for you. So thank you again for watching and see you on the next video.